With all the recent appreciation we've seen in the housing market, is this 2006 all over again? Well, I'm going to break it down. Hi, I'm Nick with the Iannitti Realty Group. Wanted to provide a quick housing update for the month of March. And of course, as always, provide you guys a little bit of context with what's going on in the rest of the nation. According to Lawrence Yun, chief economist of NAR, home sales could have possibly reached 8 million last year if we just had more inventory. We understand that mortgage rates are probably going to remain low throughout this year, although we may have already seen the lowest rates. Looking at the tracking here at the beginning of January, we got down to about 2.7%. If you've been following these rates, this is on a 30-year fixed. You know, over the past couple of weeks, they've been creeping back up. We're about 3% now. And this is exactly what we expected, right? As the economy strengthens, as more vaccines roll out, as people start getting back to work, every time we see economy strengthening, it's always going to be paired with rising interest rates. So nothing out of the norm. You know that I've been tracking forbearances since the beginning of the pandemic. Realized that a little over 50% of people who entered into a forbearance plan at the beginning of the pandemic are now out of forbearance. They're not even an issue anymore. A third of them have worked out some type of repayment plan, which only leaves a little over 15% of them that are still kind of maybe in a little bit of trouble. And only about less than 2% of them we're looking at maybe a potential short sale or deed in lieu of foreclosure. Right, so looking at the overall forbearance rates, we've definitely seen them level out here over the last quarter, which is good news. But realize there's still about 325,000 people who will exit the forbearance program over the next 6 to 9 months without a plan in place. So what that means is some of them, not all, could wind up in default, right? Could become a short sale or a foreclosure. Let's just say though, for worst case scenario, all 325,000 of them went to foreclosure. You guys know, if you watch my videos, we've been tracking just the low level of inventory we've had. If we put in every single one of those people and just assume that they're going to go to foreclosure, realize with the low inventory here in January 2021, adding in all those people doesn't even bring us back to the inventory level that we had when we started the pandemic. In other words, if all of these people wind up going into foreclosure, the market will easily absorb them. So again, if you are waiting for some big forbearance, foreclosure shoe to drop for you to get a good deal, probably not going to happen, right? Also, when we look at, again, back to the inventory, we look at our year over year change in listings. The green line is new listings. We saw a drop here at the beginning of the year. That's no good. And when we look at our total listings, they've just been steadily going down. So definitely have a shortage going on right now. Home sales, continue to ascend in the first month of this year. Buyers quickly snatched up a lot of the virtual, almost everything that we basically had coming on the market got snapped up pretty quick. And again, according to Lawrence Yen, sales probably could have been 20% higher had we just had more inventory, right? When we're looking at these inventories, tracking it over the past year or so, realize when we say sweet spot, these are probably the sweet spots to actually sell, right? When you don't have a whole lot of other competition in the neighborhood. The lower the inventory, obviously supply and demand means that you're going to be able to negotiate better terms and a higher price for your home, right? So, David Bernstein, he thinks that, as more vaccines become available, people are going to start to realize, oh my God, I can make a ton of money on my home right now. And just with that pure, equity gain that they stand to reap, we may be able to see some more listings coming in and deal with the housing shortages. That still remains to be seen. But when we look at home price appreciation, I want you guys to realize in 2020, the numbers are now in, we're looking right at about 10% appreciation across the board, right? So typical home buyers here in San Diego with our median price, in the 600s means that, most people, probably could have potentially made up to $60,000 in a single year. So normally, people are starting to realize, God, is this going to be 2006 all over again? Are our prices kind of growing too quickly? We're going to get to that here in just a second. But just realize right now that, home buying power continues to exceed median sales price throughout the nation. That implies basically that housing is not necessarily overvalued today. It's still back to a simple supply and demand. When we look at home price forecasting for 2021 here this year, we're looking right at around 6% of appreciation is going to be forecasted. Okay. Back to this 2006, though, what I want you guys to realize is when you look at everything leading up to 2006, we were looking at appreciation of over 10%, right? And that was kind of aggregate across those years. Right now, we're only looking at about 6%. So nowhere near this rate of appreciation, right? We haven't gotten to this particular level just yet, okay? When we look at the year over year changes here, this is good to look at here. In 2020 Q4, realize everywhere in the country was appreciating at least the lowest one was 8.6%. Obviously, the coasts were more around 10%, right? But when we look back to 2005, realize that a lot of these areas, half the country here, were appreciating at over 18%. So we're not seeing that today, okay? So getting to our San Diego market numbers here, realize these are all housing types. These are median numbers for the entire county. Our sales price was up 14.3% year over year from February. Active market time was only 10 days. That's down 44%. That means things are still selling much faster. Our price per square foot was up, and our months of inventory is still sitting at 0.9 months worth of inventory. That's down 55% year over year. Remember, we need 6 months of inventory for a healthy market. Okay, these are all of our lagging indicators above the line. Below the line are our leading indicators. This is telling us where the market is going, right? Our active listings are down 52%. Our new listings are down 16%. Again, just continuing on with this no inventory mantra here that we've been going off for months and months. Pending listings, sold listings continue to appreciate, right? They're still going through the roof. So as quickly as we can bring things to market is as quickly as they're being bought up. So anyway, if you have questions about what is your home worth, what's the inventory levels in your neighborhood, is now a good time to sell or buy, I'm always more than happy to have that conversation with you. Just reach out. And that's it. Thanks so much for watching. And remember, who you choose to negotiate for you absolutely matters.